Good morning, ladies and gentlemen. My name is Greg McGloskey. Today's date is September 12, 2022. This is a morning Forex report. I'm going to take a look at some of the major currency pairs, starting with the euro versus US dollar. Looking at the euro versus US dollar, starting with the daily chart here, taking a longer term view. If you go back to this high price that came in February, that was the high price or near the high price for the year in the euro versus US dollar. And we connect the highs through here. And as you can see, the market moved up close to its topside trend line here. Getting above that trend line gives the buyers a little bit more confidence. We are breaking the trend to the downside, but the market wasn't able to get to and through that level, so sellers leaned against that level, keeping the bearish bias more intact. But as you can see, the price has moved back down sort of toward the middle of the trading range in trading here today, maybe even a little bit below that level. Bring your attention to this area right through here. That was the consolidation phase before the market moved higher, moved up to this swing area through here. We talked about that in the weekend Forex report. Also talked about this swing area through here where the market went sideways through here and went below that the low of that area in trading last week for 1, 2, 3 days, but then rebounded over the last Wednesday, Thursday, Friday into the lower end of this swing area here. So everything was somewhat symmetrical until today when the market based against the 38.2% retracement, moved up to test the topside trend line, and I guess things are still symmetrical or at least supported by the technicals in that the price is above this area now, and that's where we'll be looking for support in trading today, but below the topside trend line. So there is a little bit of still give and take here in the market as the market corrects off of the lows, but we can still call it a correction, if you will, because of the inability to get above the topside trend line. Take a look at the hourly chart. And this area right here represents the low of the swing area from the daily chart through here, that swing box right there. And so we can see that in trading here today, the price moved above that level, and we saw the momentum up to another swing area. This is not seen in the daily chart, but as you can see, there's a swing low, swing high, and then base and move higher off the 100 and 200 hour moving averages through here. Found a resistance here, came down, moved up, and then came back down into this swing area again, and then fell below, and then started to use that level as resistance. So I'm not surprised that we not only ran into the resistance from the daily chart, also ran into resistance here on the hourly chart from these swing levels, and the market has since moved back down again. This is the low of the 18 days or whatever that we saw in August. July and August that stalled the pair on the downside before breaking lower in August. So we're coming back down to that area here. We should find support here if the buyers are going to continue their move to the upside in the short term and potentially get above that topside trend line and above the swing area for the euro versus US dollar. So that's the story in that currency pair, the dollar versus yen. We looked at this chart again also off the weekend report, and I brought to everyone's attention at that time the old trend line here that we broke below it here, went down to the 100-day moving average in last week trading. We moved back above it and then reestablished sort of support against that old trend line here on the correction on Friday. And again today, the market has been finding support against the lower part of this trend line, which comes in, I guess, somewhere around the 142-ish and 5 or so level here in trading today. It's moving higher, of course, every day. So getting below that level, let's get below 142, would give the sellers a little bit more confidence that they're sort of winning in the short term. This is what it looks like on the hourly chart. I did mention that we wanted to stay below the 100-hour moving average on a correction. That would be the best case scenario, and the price did not do that. We moved above it here, but we perhaps could say that the closing levels on the hourly chart did a pretty good job of staying below the 100-hour moving average. So failed break up here above the 100-hour moving average. has sent the price down over the last 6, 7 or so hours in the European end of Asian, early European session. So we remain in between the 100 and 200 hour moving averages here, and that is ultimately going to be the deciding vote, I guess, for the more bullish or more bearish scenario here for the dollar versus yen. Like, remember, the sellers have to prove themselves. The dollar versus yen has been trending to the upside, and you prove yourself by moving back below the trend line, by moving back below the 200 hour moving average. In fact, the price has not traded really below the 200 hour moving average. Go back and back in time till way back here and on August 16th. So quite a long time below the 200 hour moving average. In the meantime, the price has been moving higher, and so has the 200 hour moving average. So this is an easier hurdle to get to and through, but we still need to get to and through it. Taking a look at the sterling versus US dollar, and off of the weekend chart, we looked at the low price going back to March 2020, and noted how the price last week moved down below that level by 4 pips, and could not sustain momentum. Started its rotation back to the upside here, and in the process, we moved above its 200 hour moving average. Last time it really closed above that level was, I don't think here, is probably back over here again in mid-August time period. So getting above that level and then coming back down, testing it here on Thursday before moving higher and extending above this swing area here, above this high that we saw in yesterday. And in trading today, we're moving up to the top side of this channel trend line here, just off of these lows right here. Connected this to this right here. This is a parallel channel trend line, and we need to get above that level a little bit, around the 117, I guess 12 or so level on the top side. Get above that, and 38.2% retracement. This move to the downside becomes the next focus at 117.37. And bring your attention to this swing area. Swing low, swing high, swing high, swing high, swing low, swing highs, highs, or lows, lows, lows here. Swing low, fell back below it, and last time we came up to this area was this high. We got up to this high right here at 117.59. So we need to get above 38.2 and then start to get above the 59 to or 60 level to 117.85 on the top side, and then we'll look toward the 118 level, and then 118.40, 50% retracement of the move down from the August high to the low here. Again, if we take a look at this on a daily perspective, the trend to the downside is intact here for the sterling versus US dollar. So the buyers have to prove themselves. Getting above things like this trend line through here would be something that the market needs to do and get through. But there's a lot of room between here and there. So what we're seeing is corrective action, but the hourly chart's going to sort of tell the picture. What you don't want to see on the hourly chart is a move back below this high right here. When 54.46 is that was the high from Friday's trade. That would be a disappointment, and also this swing area down here, getting below that level and getting below the lower trend line, 100, 200 hour moving average. Just not the right thing to do if you're going to move higher here in the sterling versus US dollar. But early days for the corrective move to the upside. We'll see how all that plays out. The buyers need to prove themselves. We'll see if they can do it. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.